Okay, let's get right into the stock market technical analysis. We're going to go through the various charts, show you guys what I'm seeing from today, and we'll just dive right in. So, triple Qs. Obviously, there's a rally going on today. It's relatively broad-based. When I look at the S&P 500 heat map right here, I can see it's pretty broad-based, and the sectors that are selling off are healthcare and consumer defensives. So just kind of a risk on day, and it's broad-based. So that in general is bullish. You know, over the last couple of weeks, we really have only seen the leading FANG stocks, the large cap techs, participating in the rally. Today, we're seeing more of a broad-based rally across really the entire market. So that's bullish to see the market kind of catching up. That maybe is going to continue. We'll have to see. But in general, yes, that is a bullish day today. Doesn't mean it's, one day doesn't make a trend is what they say, but today it's bullish. Apple not really moving up, and Microsoft kind of flat, but in general pretty bullish. So let's go ahead and look at the charts. Here's triple Qs. Show you guys what I've got on this one. So a couple things. We still have that bullish or that bearish rising wedge. All right, that's not really been negated. Now, we are getting that break to the upside. I talked about that the last couple of days, how, sometimes when you see these wedges, it's a very obvious wedge. Market makers like to break these things to the upside. Then they'll reverse it, and then you'll start that big move down, which is what this big wedge is forecasting, is a downside move. But sometimes they'll break it to the upside first, run a bunch of stops, clear stops out, and then reverse it. So that's what I'm still anticipating. I still don't see enough in the charts that tell me that, we've started a new bull market or anything like that. I think we are at or near the highs. But one way that I'm playing it, I decided to play it, is to cover a little bit of my short trade today. I covered 33% of my shorts. And just a momentum kind of thing. If this is going to break to the upside and do this momentum trade, I don't want to ride that out short. So what I'd rather do is cover some of my short positions. And then if I see that reversal, I can always just jump right back in. I mean, it's literally a click of a button. And yeah, you give up a little profit here and there. But in general, I can still get positioned for that next leg lower with a click of a button. So mitigating a little risk right now. With covering some of that because of this breakout, you can see these things sometimes run a little bit. So I don't want to ride that out. So let me point out kind of what we have going on, because obviously the divergence, the negative divergence is still there. Yes, it can get burned through. If the triple Qs just continues to rally, yeah, you're going to burn through the divergence. But that hasn't happened yet. So I can't bank on what might happen. I have to bank on either what has happened or what's showing up in the charts. As of right now, we have divergence on the daily. We have a bearish rising wedge. These are two patterns and basically two conditions that put the probability to the downside, but doesn't negate that sometimes you see these little stop rate moves. And that's what this looks like right now. One level that I'll be watching for, and kind of a key development, the former high back here. This is your bear market in the tech sector. The former high right here, which is about August of 2022, I see that really at about 334.50. Right around in there was kind of your former high. So we don't have a daily close above there. If you get a daily close, really above there, not just a penny, 10 cents, you might get that, but in general, I'd want to be seeing something where you get a daily close that you're clearly taking out that level, closing above that 334.50. That changes the picture of that. It changes the broader technicals. You have lower lows and lower highs, and as long as you keep the daily close below this 340.34, then the bigger picture is you still have a lower high or an equal high. We're very close right now, so again, that's really the key level I'll be watching for. You get that close above there, we'll probably start, and especially, consecutive closes, you're probably going to start to build and continue to rally. And it really just dampens the bearish case that we're still in a bear market, all right, at least in tech. The SPY has a little ways to go on that, but at least in tech. Okay, so basically we'll watch right now. I'm looking for a hard reversal. I can easily see us getting up to 334-ish. One thing you'll want to look out for, if you get up to this 334-ish, they might pop it intraday. I think that's very possible, probably very probable as well. They pop it intraday and then they reverse it, all right? So I'm really more concerned about a daily close above that 334.50 than I am about a move intraday above it, all right? If we get a move above it intraday, I will be looking for that strong reversal, a hard reversal. So keep an eye out for that. And if you don't get it, then obviously, like I said, we're going to change some of the technicals. But if you do get it, it keeps this bearish thing intact. And sometimes they like to push these trades right to the very edge, and we're basically at that really key level where we should start to see that reversal if, close, obviously it could pop intraday, but again, you pop intraday, look for that hard reversal. You don't get it, then we reevaluate. Let's look at the Nasdaq futures here, see if there's any other kind of look on those. So again, bearish rising wedge on the Nasdaq futures. Again, they're popping it today. So far, we're popping above. So yeah, maybe it wants to run a little bit, and then again, I'd look for that hard reversal. So at this point, a break below this wedge, this support zone right here. All right, you pop up, you come back down, you break that wedge. That's kind of the next sell signal. All right, I would view that as the next sell signal where I'll likely probably add back that short exposure that I just covered today. Okay, the S&P 500, this is the SPY. I haven't covered this one in a while, but again, I just want to kind of highlight how a lot of the price actions really just been tech. Here is basically March 31st, and we've basically gone nowhere in the S&P 500 for, a couple months now. And yeah, that's it. Basically gone nowhere. Now we are continuing to diverge. All right. We continue to make negative divergence. So looks like topping pricing action, but doesn't mean that we can't continue to kind of pop. And that's what you're seeing is you're seeing these pops, making new highs, selling off, making new highs, selling off, making new highs, selling off. Until you see a definitive breakdown, it can continue to do that and kind of grind higher. All right. Yeah, that's all I really see on that one. Okay, these FANG stocks are obviously real critical right now. Amazon, a couple things I want to point out about this one. So that island reversal candle right there is the daily close on that is about 112.94. Yesterday, it closed slightly above it, but not, close enough. Today, though, gapping up, and if they close up here, that's going to negate this as a reversal candlestick. Okay, so keep an eye out on that. It just kind of means that this doesn't really act as a reversal candlestick, and we can't confirm that. So watch for that daily close. If they sell it off in the next hour and the market just does that hard reversal today, which is completely possible, then that will be a tell. But as of right now, we're above that, so we'll just watch how that closes. Google. So Google's running into some resistance. This is very consistent with kind of that triple Q's chart. You have lower highs, and there's your lower high right there, and we've rallied pretty much into that area of resistance. So a technical update would be a close on this one above 122.40 would really set this up for making a new high, and it just reverses this trend. This is the larger downtrend. This downtrend is still intact as long as you do not get closes above the former high right there. So we are right there at resistance. Look for that hard reversal. That's what I'd be looking for. But until we see it at this point, the momentum's clearly up. So just keep an eye on that. Microsoft, just floating. It just continues to kind of float higher, basically at resistance. We did make a new higher high in Microsoft right here. They broke it out on right after earnings, it looks like. So obviously that is bullish, but it's just continuing to kind of float higher. We're at the next level of resistance, which is right about 315. Just slightly below, but that would be the next level of resistance. So look for that to hold a daily close above that 315. Let me make sure I got it. Yeah, it's about 315.50 or so, 316. It's right back here, that peak. A daily close above that changes things, and that really means that it's very likely at the, a daily close above that means that Microsoft's likely going to go test the all-time highs. All right, so that's kind of the alternate scenario that I see is, and that's why I'm starting to cover some of my shorts. I started with, obviously 33% of my shorts. The alternate scenario is market's going to continue to rally and run up and make a double top back at the all-time highs. I don't know if that's possible. I don't think it is. I mean, the divergences, the negative divergences remain intact. They continue to build. I think those will likely play out sooner rather than later, but maybe there's a momentum move that's going to spike up. So have to mitigate risk when we see it. Meta, basically just right there at resistance. This is kind of your former resistance. Pretty much is right where it spiked up to after earnings, and we're there now. So that's resistance. No technical change on that one. Negative divergence remains intact. Very similar to the rest of these FANG stocks. They all have negative divergence. They're all kind of popping into some resistance levels. This can go on for a few more days. Could go on for a week. There's no time limit to how long this can go on. But we have to continue to watch the key levels. And if we start breaking and closing above key levels, it changes the technicals. Apple is no change from 2 weeks ago. I mean, this is just weeks of sideways price action after earnings. It's really gone nowhere. Looks like topping pricing action. You've got negative divergence. You have a bearish PPO crossover. Okay, price is still going higher on many of these, not all of them. But, the Apple's kind of going sideways. And today we're seeing some of the other tech stocks, not the large cap, but maybe some of the other Nasdaq 100. They're kind of pushing the triple Qs up. And some of the large caps are up, but obviously not Apple. But the thing is that a lot of these are just kind of, going sideways while tech is, the triple Qs is still rallying. So we'll keep an eye on that. For me, I've really talked about this level really for the last couple of weeks being that former high right there. All right. I really wouldn't want to see a daily close. I mean, the former daily close is right there. It's about 174.34. Okay. And if you roll out, we have not had a daily close above that level. So that still remains as a former high. And if you sell off here, it's going to be still lower highs. All right. Lower high, lower high, lower high, and a lower high. Let me move that back. A lower high right here if we don't go any, much higher from where we're at. So we're at that key pivot point. Just waiting for that reversal. All right, that's the name of the game right now. And if it doesn't show up, we start stopping out, which is kind of where I'm at right now. Covering, mitigating some risk, and I'll add right back. I can easily short right back into a position with the click of a button, if or when I see that trend reversal. Wheat, I know a lot of people are interested in the wheat trade. Still looks good to me. Still looks bullish. Big bullish falling wedge. All right, this has been building this wedge pretty much for at least about a year. So it's a year-long bullish falling wedge, and yeah, we're down in the position because we got in a little early, buying at some of these support levels. So down slightly, but still looks okay. Little breakdown, kind of false breakdown, and this is close enough to where the wedge is still intact. So I'm still looking for this to rally up. You still have big bullish divergence. Everything's there from a technical standpoint. Nothing has changed, regardless of, whether you get these little days where you kind of pop down and grind around along this support line. That price action's okay. All right. It's when we start to see this really start to, break down, starting to continue lower. That negates, that really starts to set this up as, kind of negates this bullish falling wedge. But as of right now, I think it's okay. We already had one false breakdown, so I really wouldn't be thinking we're going to get another one. And you can see today they were down here, but the bulls are there. They're stepping in and buying it, and it still looks okay. Okay, Nvidia. So Nvidia's former high, kind of former reaction high right there at about 290. All right, there it is. As I roll out, we haven't been able to break above that except for today. All right, yesterday, yeah, close enough, but today, moving higher, and if we close up here, then that kind of changes some of the technicals, all right? And that really sets Nvidia up for a move back to the all-time highs right here at 337. Okay, that's kind of your former highs. So, you know, I don't know. There's about an hour left in the day. They'd have to sell it down pretty hard, have a pretty strong reversal. Maybe some headline floats out or something. But, you know, unless you see that, then yeah, that tells me that Nvidia is likely going to run up to the all-time highs and make a double top. So, yeah, that's it. Traded accordingly, you know. It still has negative divergence, so that double top likely will get sold into and prove to be the end of this move up. But there's no guarantees, of course. Divergence doesn't guarantee you're going to stop, because if you keep going higher with divergence, you burn through the divergence. So typically, you know, you can short this thing at resistance. If you have divergence, you know, shorting something at resistance with divergence is a high probability, really a high probability trade. But right now, if we close here, we're not really at resistance. Resistance would be all the way up here at that double top area. So, and that sets Nvidia up for a move of another, it's about 12%. I don't really want to ride that out short, to be honest, if it's going to do that. So keep an eye out on that one. Okay, and I've just been kind of scanning around. That's really all I got for today. So just want to get my thoughts out, get it out to you guys. Obviously, you know, can't get everything right. So if I'm wrong on this one, and we're going to continue, you know, so far I have been wrong. I mean, that's obvious. But, you know, doesn't mean I'll continue to be wrong, but we'll see. We'll see how it goes. Again, we just have to mitigate our risk. At the end of the day, we put the probabilities in our favor, take a trade, and then manage risk, all right? Because nobody knows where a stock's going to go. All we know is what the charts can tell us. So we manage risk and move on to the next trade if we end up being wrong. So I'll get the video out there, guys, and drop me a thumbs up if you're finding value in the content, and I'll catch you on the next one. Bye.